analysis, etc., price action. But before we do that, just a quick introduction of this webinar, in fact, and via this presentation, PowerPoint presentation here, if I can get the right screen to enlarge. 1 second. No. Maybe it's this one. Yes, it is. Good. So, once again, welcome. First of all, though, before we start, we have the disclaimer saying, for instance, that the material here is intended for a global audience. So please take that into account, that the session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange of global financial markets and products is considered high risk, and it may not be suitable for all investors. Therefore, please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here and on the admiralmarketsglobal.com website. And as always, I thank you for your attention on these two aspects. So today, the topic is Camarilla and intraday trading. Those will be the main vision or main focus points for today. We'll be using basically moving averages, 21 EMA and 89 EMA. You will see Camarilla, obviously, pivot point indicator. You will see just common daily pivot points and weekly pivot points. And we'll be looking at an oscillator at the bottom and price action, plus occasionally fibs and trend lines. So I think that roughly covers all the tools. How we use them exactly, of course, is something you'll see in a second, but I like to use this step-by-step approach, and that is the trend, opportunity, filters, trigger, and then decide the entry method. So let's take a look at the calendar. First of all, before we start, we have pound CPI news in 1 hour 40 minutes. We all know what kind of effect the pound news can have within the London session, so that is something to be aware of. We also have U.S. building permits, core CPI later today, so be aware of that in the New York session. Tomorrow we have, by the way, FOMC, and I think also some pound event. Let me just take a quick look. Pound meeting minutes, indeed. MPC meeting minutes, just like we have on the dollar, FOMC meeting minutes. So obviously those are two big things for the pound, on the pound and dollar. So pound dollar could have a rocky, hefty day tomorrow, who knows. Those things are definitely going to be potentially influencing the market. So with that said, we can move on and take a look at our currencies. Now I myself, if you're not aware, I've been on a holiday a week and took a few days off. I see that not many of you are in here today, so probably a decent amount of traders have done the same maybe for this week. And well, if you look at the market, I mean, if I looked at what I missed the last week yesterday, then it doesn't seem to be much. So it's probably a good time indeed to take a few days off. Obviously, August is well known for a lot of consolidation, so it doesn't seem like a lot of things have happened. But if you look at the euro dollar yesterday, we did have some action. We had an interesting down move on the euro dollar. That's within a big consolidation zone. If you put trend lines connecting the tops like this, for instance, we can see that it's pretty easy to spot the tops and bottoms here. For instance, well, the bottoms could have various lines like this, depending on how steep you want that trend line to be. But obviously, we have a lot of consolidation here. So that all started in August, more or less. I don't have my drawing to open. 1 second. All right, sorry about that. So what I wanted to draw was this. This could be the start of a triangle, which you can see here. Probably something like this. It's always a question, of course, if that is exactly true, but roughly a triangle always uses A, B, C, D, E, and this could be the A part of the triangle. The B, as you can see, is well above the initial bottom here at green. Then we see that C is below A, D, which is probably here, is above B. So those are, typical, of course, for a contracting wedge. The conditions have to be such that the B is above the original bottom, the D is above B, C is below A, and E has to be below C. And what do you see? E did break above this top, but it didn't break above the C top. So that is still possible technically, within what we could expect from a contracting triangle. So that it broke the red top, that's just an internal, let's say, part of D, therefore not significant in necessarily changing the formation, and it still remains a valid contracting wedge. Of course, that would change if C, the top of C, gets broken, but it didn't. Price was about, well, only a few pips shy, but still didn't break. So yes, this could be E, and we're heading back down again. And we're going to break maybe to the downside. So we're breaking the second orange line here, this lowest orange line on the hourly chart as we speak. So who knows? Now, it is August, so breakouts tend to be a bit rough. We'll have to see maybe how a 4-hour candle indeed breaks that trend line. Is it a good close near the low, for instance? Is it a decent breakout candle, or is it a major wick and the breakout doesn't go anywhere? Those are questions that are probably even more important to monitor, especially in August. Within the 4-hour chart here, and you can see the daily chart too, we see a pretty good downtrend though. So that consolidation nicely bringing price back to the 34 or 21 band. I think this is 21 band, sorry, 21 EMA band. And band is the 21 EMA high, low, and close. And you can see the price is well below that band. There's a good distance between the band. The band and all moving averages have a good downside angle. So there's a lot of bearish momentum despite maybe the, let's say, 2-week sideways move. There's a lot of bearish momentum, so, and a good downtrend at this point. So this consolidation could be just a pause, and now we finally see the follow-through of that downside move on the daily chart. So this is the daily chart, and bearish weekly chart also 13 actually, sorry, here on this chart below the 21, indicating a lot of momentum here because the 13 is pulling away from the 21. We also have lower lows and lower highs on the weekly chart, clearly on the daily chart too. So when we look at the daily, the weekly, the 4-hour, it is heavily bearish. So if we look then at the hourly and we see a breakout to the downside, it's certainly with the trend. So all depends how trustable, how sustainable, how much momentum does this break have. And I probably would, as I already said earlier, I would use probably the 4-hour chart, the 4-hour candle, to see if that breakout is good. If we zoom in all the way to the 15 then, we see that we're pushing through L3, which is the Camarilla level. And we could have maybe some space down to the L5. Let's take a look where the daily pivot points are. Bouncing off daily S1. So if we go down to a weekly S2 and daily S3, for instance, is 133. That could be the space for today's price action. One second, it's a bit okay. It was a bit stuck. There it is. Good. So yeah, this looks like good momentum, and I would say let's give it a bit more time maybe. It does have a good breakout. Let me take a look when the 4-hour candle closes. The 4-hour candle could have the disadvantage of maybe waiting a little bit longer than you would like. Let's see. This is 8 o'clock. Eight o'clock means still about 2 hours to go before that candle's finished. So if the 4-hour candle is strong, as I said, that is something I would look for. Anything between now and 2 hours from now, we could still see follow through, especially if the 4-hour candle remains strong. But yeah, I think it's a bit risky in the sense that these breakouts sometimes are not as strong as we hope, especially in August. There is certainly momentum, and maybe normally speaking, I would even like to take this breakout right here, right now. I have a bit of doubt because of the fact that it is August and we're maybe at this 133.50 level still. No, that we broke through that. It's probably August that I still have some doubt. But that's up to you. If you like the breakout, we are pushing through L3 long and we are pushing through the trend line. So maybe some of you are in that shorting zone here already. And in a short, I will take a look at other pairs to see if maybe something else is going on and rather wait for the 4-hour candle. Pound dollar. Let me quickly use a different template. There, that's better. Pound dollar is actually the one that moved the most last week when I was looking back at the charts yesterday, and fell a lot on Wednesday, maybe, as you know, probably because of the pound news event. And this is looking like a big momentum, big AO reading here to the downside, and price has gone back to the zero line as a retracement of that big downside momentum. So if we put a fib on that big downside momentum, we can see price hit the 38.2-point fib. So for those that listened to yesterday's video analysis, maybe by any chance that I released with Admiral Markets every week, I was saying that this is probably a good shorting zone at the 38.2 fib, and I wouldn't expect price to go above the 50. If it does, then things are looking not as bearish, and we're getting more in a neutral territory. If it stays below the 50 fib, the 38.2 or the 50 fib are good shorting zones in my opinion. And price was heading up at that point, actually, so it looked like it would hit and reach the 50. It looked like there was some momentum to the upside, but that didn't happen, and we actually didn't even touch the 50 fib. So this looks like a good rejection off of that fib. So hopefully, or maybe you are in that trade already. If not, let's take a look at what we can expect maybe today. Will we get a follow through, or we still hit that 50 fib? Still possible, but less likely now with this recent drop in the early morning. Problem is we have a pound news event, so that's something that always remains to be seen. But otherwise, this looks like a bearish momentum. Also going to close the gap probably. So if we do close the gap, something of a bounce could happen around 167. Otherwise, it looks pretty bearish to me. Let's take a look at the hourly now. Hourly candle just closed 2 minutes ago. And if you look at that candle, it looks pretty decent. So a retracement like this, or a bit more, maybe a stop loss above the weekly pivot point with a target of let's take a look at the daily chart maybe. There are really tight pivot points. I wouldn't look at the pivot points because that's really a bit too tight. Would have to be probably the targeting at least the bottom here at 166.80 at minimum. No, sorry, 166.60 is the bottom. That would probably be the main target for the moment. There's nothing else. I mean, the pivot points are too tight. They're too consolidated to really seriously aim for those. So that would be a 50 pip potential versus about 30 risk, which is not bad. That's great, actually. So how far can price retrace back up? That's the question. I mean, this itself is already a decent discount. We could put a fib from here to here. For instance, the 38.2, the 50 fib, the 61.8, those could all be resistance spots. If you don't like to trade the retracement here, you could also wait for price maybe to show some rejection on the 50-minute chart a week or so, and that would be another way of doing it. Or wait for the break of this bottom. Although it is already at the L5, I think that these levels are pretty crouched up. They're pretty tight on each other, so maybe not as important today. I don't typically like to go short right into L5, so probably the pullback is better than waiting for the breakout of this bottom. But in all honesty, as I already said, these levels are very tight, so it would be, it could happen that we stay within this tight range. Probably not too likely, though. So for me, at the moment, it looks good for shorts. But as we know, with the news event around the corner, we really are very heavily dependent on what the news will be and how the reaction will be to that. If the pound, is positive news and this flies up, starts banging against the H3 here, flies up like that, starts to make a bull flag, well, that bearish character that I see now is gone, obviously, right? So it is very heavily dependent on how the news will be reacted to. But in general, there is a good downside momentum. There is a good AO reading. We're back to the zero line. We're at the 38.2 fib. Technically, I think there's a fair chance for follow-through off of that fib and off of that rejection. Also, if you look at the 4-hour chart, lots of downward momentum. And no divergence as yet between these bottoms, also interesting and good to note. So in that regard, a follow through further down due to the lack of divergence between the bottoms is a decent probability. USD doesn't seem that interesting. Let me refresh the template here. Does not seem that interesting. I got too many lines here. One second, folks. Let me. This is strange. Okay. Right now. Never mind, I was just checking the template. The USD in a very slow methodical upside, I don't know, it really doesn't appeal to me too much. Just caught in a very big consolidation as well. Looking at these orange lines since beginning of April. I don't really see anything that I would like to trade when I look at this particular pair, no matter what time frame I look at. Sometimes there could be time frames that are less interesting. Sometimes an hourly looks great, but a daily is horrible, or the other way around. Hourly looks horrible, but daily looks great. This pair on all time frames, including the 15, I think, does not look appealing. Kiwi. So if we look at the Camarilla, we can see the price already extended past the L5. There's sometimes, the problem when you have a slow day like yesterday, Monday, the pivot points are very bunched up and tight. Like, for instance, the pound, every pair probably, a euro. So when price then breaks through it, and you're trading the Camarilla, it's difficult to trade breakouts because of the fact that you kind of exceeded what you normally see as a target, because of course Camarillas are that close by. That would be a disadvantage. So, but you can of course trade it differently and wait for pullbacks, and or trade maybe reversals even if there's some extra confirmation of that. Though those would be ways of trading instead of breakouts. Obviously, if you were trading the Asian session, maybe you would have taken this candle, for instance, here. This is a good breakout candle. Why is that? Because it's, first of all, it's a pretty big candle size-wise. The candle closes near the low, so there's a pretty good momentum in that downside break, especially if you compare it to the smaller size candles prior to that. We also see that that particular breakout candle, this one, oh no, this one, has a, now I forgot what I wanted to say. Yeah, it put the moving averages, the 21 EMAs, into a bearish mode. They're bearishly aligned, the moving averages. Plus price broke below the L3. So there are a lot of things that made this a particular good breakout. Now, why do I talk about this particular candle? Because that is, I just want to show you an example here of a very good breakout candle. But that happened in a different trading time zone. If you were trading Asian session, this would have been a good one. Do we have that set up now? No, because unfortunately sometimes it happens that breakouts occur at different time zones. And that was the breakout. We can't really do anything about it in the sense that sometimes there's just one moment that a pair breaks out and that's it for the day. Maybe there are two breakouts, but typically you don't have 50 breakouts on one pair on one time frame. So sometimes you have to also realize that a breakout like this occurs, and then we just have to wait for a new setup or trade a bit differently. So this is a good breakout. That's a good example. If you take a trend line here, like that, you can see the breakout. Then if you use time factor as a rule, as we've discussed more often, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9th candle not breaking this bottom, and that's the moment where price went into consolidation. So that would be one way of also getting out at a pretty good timing / price. You would actually squeeze out the most you could probably squeeze out of a trade like this, which is roughly about 30 pips in this case. The price is at the weekliest one as well. Maybe even a swing trade here to the downside upon the break of the weekly pivot point, for instance. So, when you break that level on this hourly chart, maybe even worth a swing trade. Here you can see a bit different in the 50-minute world, but the hourly world showing daily, weekly pivot points, price stopping at that, but already having a bearish moving averages here, and then price breaking through that level, through those support levels, which could be a swing trade. If you look at it from a 4-hour perspective, you can see also that not only through the pivot points, but also through the moving averages with a good breakout candle. So from a swing trade perspective, one could put a fib on this downside and wait for instance, price to get up to, as I said, the pullback. That's what we need. to the 50 fib, to the 61.8, even the 78.6 could be shorting areas for the Kiwi. So Judy is saying that, or asking about shorting the Euro odd to trade the Aussie. Let's take a look at the Euro odd. Well, the Euro odd definitely looks better than the odd USD. The odd USD are more in balance with each other. The Euro odd is looking definitely more bearish. Looking at the moving averages and the angles and multiple time frames, you can also see that price is trying to poke through this particular trend line, which has done so far pretty successfully, I would say. Looking at the 4-hour chart, we can see an entire 4-hour bearish candle below it. So I would think that that should be sufficient. Hourly chart, we're seeing some bounce, but everything is bearish. 15-minute chart. Price trying to poke through L3. Some divergence between the bottoms though, so we could see maybe a bit of retracement. But it is a 50-minute chart, so it doesn't have to be, an entire few hundred pips. Logically, it's a small time frame. So for the moment, maybe we could expect a small retracement. We could put a fib on this 50-minute chart, for instance. Let's take a look where price has gone. Price tried to get to the 50 fib, almost hit the 50 fib. So any of these fibs could be the turning spot for that follow through on the downside. So that's something to keep an eye on indeed. The Euro odd. Just like the Euro dollar, although in my opinion, waiting to the 4-hour candle made sense. That, of course, that particular breakout will have an influence on this Euro odd too. If the Euro dollar breaks out lower, it would be good for the Euro odd too. So might be worthwhile to keep an eye on the Euro dollar breakout as well to see if this Euro odd will make the turn at one of these fibs, as I expect. So that's something to keep an eye on, just like the pound dollar and Euro dollar later on. Plus Kiwi. All of them are more shorting territory, right? Pound dollar now, Kiwi may be from higher point, right, from a retracement point, just like the Euro odd from a retracement point. And Euro dollar, potential breakout, but waiting for more time confirmation. Dollar CAD. I still have the old template. Let me get rid of some of, I could use the new template to get rid of some of the tools because it probably looks a bit better and easier to see like this. And what do we see? Well, not much in my opinion. Dollar CAD is pulling the moving average towards each other within a tighter consolidation, within a kind of like a contracting wedge. A pattern on the hourly. On the 4-hour chart, we see prices also stuck between moving averages and pivot points. And the daily moving averages are flat, so I'm not interested in the dollar CAD. Dollar Swiss. Well, it could have the opposite effect. Obviously, if the euro dollar is moving down, the dollar Swissy will probably move up, but not too big of a fan of the dollar Swissy either at first glance. Bullish day yesterday. Well, if we look at the weekly chart, obviously we see higher highs and higher lows. Problem is, though, we had a couple of weeks of a wick on top of the candles. So some retracement from those wicks might not seem too strange, despite the uptrend on the weekly here, maybe. No, I don't see anything particularly interesting on the dollar Swiss at the moment. Maybe break out to the upside. I don't know. I would rather probably even trade the euro dollar than at the moment this dollar Swissy. But there is that trend up. So if it does break above maybe a trend line like this, we could see follow through, but not too excited about it. Dollar yen is also very big consolidation. Not too interested in this either, but we can review it just to be sure. If price maybe does break above a trend like that, there could be some space maybe to the upside, but the space is so small that before we bump into more resistance that I have serious doubt that it makes sense to trade that. So no, not interested. Euro yen, let's take a look at the other yen pairs. Flat on the hourly, flat on the 4-hour, downtrend on the daily. Wick on Friday's candle. Doji on the weekly. Well, no, not looking too appealing. Obviously, if you use trend lines, this could be a break. However, because of the flatness, I don't like that particular break, and you can see that it's actually pretty much reversed all that breakout so far. And if moving averages are so flat and price is moving away from the average plus the pivot points, it's not really often enough a very sustainable breakout like we see right now. Price is already heading back toward that. You kind of see that often. If price tries to move away from something that doesn't have any energy, it's really like very, very flat in its movement. It snaps kind of back to the average. So, and if you see moving averages at a steep angle and price goes back to them, then they are more used as a support and resistance. When you're as flat as this, when you're as flat as Holland here, you know, then they don't really provide much of a breakout value. So the euro yen doesn't look interesting either, and the euro dollar is already moving up as well. That's probably why the euro yen is also snapping back. Let's see if this is a retracement, or was this just a false kind of breakout early in the morning. That's why personally, as I said already, I rather wait for this 4-hour candle to complete to see if we get something like this, then it's not a breakout I would like to trade, or if the candle indeed closes somewhere lower down in here, for instance, preferably near the low of that candle. The pound dollar did bounce off that level we were talking about here, the L4, but you know, it's just a small bounce so far. Let's see if it gets some follow through. So let's continue. The euro yen, no. The pound yen, I guess, will not be too interesting either, looking at the yen pairs we've looked at so far. Not really. It does have a bit more downside to it because of the fact that the pound was weakening overall. Net weakness last week, let me say this way. It looks a bit better for a downtrend at the moment, but it's a pretty choppy one. I'm not a big fan because of that. Let me take a look at the 15. No, I'm not a big fan, but I think, well, I mean, if we break below L3, there could be some breakout to the downside. But we have a daily and a weekly right in front of it. So no, I probably would sit on the sidelines even with this one, for the moment at least. Pound odd is different. That's something we can discuss. Pound odd is interesting because of the fact that on a daily chart, we are breaking below this trend line, which seriously looks, let me use a different template by the way. We are breaking below this trend line, as I said, which seriously looks like a major bear flag because of its angle. It's a very, very significant big bear flag. Why? Because, well, it actually took 110 days. If you take the bottom here and drag it to current day where the break had happened, no, not 110, 90 days. Well, anyhow, roughly a quarter of a year. As you can see, this dates back all the way to April. So a long consolidation period. And price was in a fall prior to the consolidation period. So now that we're breaking below that consolidation, it looks like a follow-through of that downside momentum. Interesting, right? So obviously, moving averages are flat after such a long period of time, so a breakout like that does have its risks. If you look at the daily chart, how the candles look like, well, they look pretty bearish. We did have a very big breakout candle. The low very close and near the low. The breakout candle is substantial size, so it doesn't quite push through. I mean, in the sense that the candle is partly above the trend line, so it's not a full major breakthrough. But we do have now daily candles that are really below it. So yes, it looks like a good breakout, probably because of the pound side of things. And we are trying to break through this, as I said, very, very big bear flag. So yes, that is interesting. Looking at the 4-hour chart, maybe some of you shorted this, trend line break right in here, maybe something like that. If not, then maybe shorted a break somewhere in here, and you're in that trade, a swing trade. And if not, let's take a look at the 15, and then maybe somewhere in the Asian session where the L3 was broken, right here, right? That's a particular breakout one could look for. Moving averages bearish. Other factors are bearish, as we've discussed. So if price then breaks through that, it's looking at an L3 break. So in the meantime, we're actually getting a rebound. It's a pity I didn't look at the pound odd earlier. We got back to the 50 fib. And the price is moving lower. So what are the options now? Let's take a look. Well, not much, because we have a news event probably coming up soon, so we'll have to wait for that, I guess. But let me zoom to the hourly. Well, with the breakout and pullback already occurring, I guess the only option is waiting for a break of this bottom now. on a 4-hour or daily chart, in fact. On the lower time frame, I think we need a bit of patience here. On a daily chart, if, for instance, a daily candle closes below the blue line, we could wait for retracement of that daily candle and take it short with a stop loss above the daily high. From a lower time frame point of view, I don't see anything that is worth trading at the moment. Unless price really gets up again, maybe to the 38.2 fib or the 61.8 fib or any of these fibs. So I wouldn't trade it here. It's too close to the L5. What could happen is it falls down to the L5, then bounces off the blue line, minus 272 target, and L5 confluence, these three things, and then heads back towards the 618 and then drops again. So I don't think it makes sense to trade it here. I'd rather wait for a retracement, or if it does break through blue, then to wait for a retracement tomorrow. Alrighty. Pound CAD moving down too. Is there anything else? Let's see. You're in New Zealand maybe. Or you're a CAD maybe. Your CAD is moving down. Let's see. Maybe the euro is finding renewed selling pressure. Yes, it is. So EuroCAD, let's see. It's a bit slow, this breakout. Doesn't have much momentum. It is trying to break out, obviously, but we had a bit of a wick here. Price is trying. It's trying its best to break out. It's not so much succeeding on the EuroCAD so far, but it could change. Maybe if we see a couple of more candles, then waiting for a pullback and go could make sense. At this moment, the EuroCAD, I wouldn't trust the breakout as yet just because of the euro dollar indeed. It's something to keep an eye on though, maybe throughout the day to see if there are some EuroCAD potential for downside. But you can see we have to be careful with the disparity. There are a lot of spikes to the upside here within this downside. So yes, but with caution. Pound Swiss C downtrend. Spiky downtrend, not that super interesting. Gold also big consolidation. XAG. Daily chart pushing back towards that 18 bottom that we saw throughout last year and parts of this year, 1860. But we have a bigger bottom, I thought. A bit lower. Let me check. 18. Probably 1810 or something like that. I don't know. The numbers are not popping up, but it still could push to that level. Obviously, we could see a quadruple bottom. Who knows? Every time we reach that level, this blue line, we've already seen two bounces off that level. So we could maybe head and fall towards that level. Is it moving nicely? It is not bad. It's going slowish, but it is moving down. So looking for more shorts on XAG, contrary to XAU, does look appealing. We are below the weekly pivot point, so maybe a hook back to that weekly pivot point, to the fact that we broke these bottoms in here. Obviously, here we broke many bottoms, so if we hook back to that level, it could be an interesting resistance zone potentially. Let me see if there's divergence going on, though. Not yet, I would say. We got a good fall in the 4-hour and daily, so it would make sense to me to look for resistance at either the 20 psychological level or this 1975-ish weekly pivot point. Let's see. Can I look at WTI and Dow? WTI. I don't think I have WTI. Yeah, the demo account I had for the indices, I don't have anymore. I think I needed a particular account. And I forgot how I opened it exactly. Let me take a look in the meantime. Yeah, I definitely feel refreshed, Bob, by the way. A week definitely is sometimes good, or a few days, or sometimes even a day, to get a refocus again. I think it's Admiral CFD I need. Is there any other pair, as you know, I'm opening this demo quickly. Is there any other pair that someone has in mind? Any other pair that you would like to take a look at? Or is it quietness? Okay, great. Hatem says everything is covered, or the important stuff is covered. Turkish lira, which against, well, I don't think I have access to that one. But which currency pair are you looking at? The lira against, I would need to know which one. I can then check, but I don't think I have, probably don't have access to that one. Oh, the euro, okay. Let me check, yeah. New Zealand yen, definitely, I can definitely look at that one. Let me see, we got euro yen, euro pound, euro Swiss, euro odd, euro CAD, euro New Zealand, euro Polish zloty. Got some dollar crosses against various ones. No, it doesn't look like I can access that one. Sorry about that. Let's see. Oh, okay. Sorry, Bob. It says that it will be sent to me. I'm not sure how fast it will, you know, when I will get it exactly. But I guess I will be able to show it tomorrow, though. I'm not sure. I'll get the email maybe any moment, but I'm not sure exactly when I'll get it. So, but by tomorrow I should have it then. You can take a look at WTI and the Dow. In the meantime, New Zealand yen. Let me see if I can find it. That's here. Bearish candle at the 21 band. Moving average is aligned. And that was a rejection candle on Thursday. Bearish moving average is here on the New Zealand yen daily chart. So I want to zoom into the lower time frames, but my computer is a bit slow at the moment. I'll have to clean up the hard drive, I think, because it's getting a bit too full. That's why I think it's slowing down. So I have to delete some stuff. The New Zealand yen 4-hour chart is looking like a good breakout to the downside. It's below the pivot points, actually. It broke out of this support line, something like this, one could say. Sturdy retracement, but follow through back to the downside. So this looks better than the other yens. I'm surprised to see yen, but this certainly does look more interesting. A good fall here with good momentum. Price almost hitting the 50 fib. So yes, it looks like a good setup. It passed the L5, so that's the problem with the breakout at this moment. But you know, taking a breakout right here, maybe it is risky because it's so far, but it has a good momentum, so there could be follow through with that momentum to the downside. And as soon as we push through this 15-minute bottom, we could see that follow through to, for instance, the minus 272 target at 86.30, and then maybe even 86.10. So that could be very interesting indeed. For our chart, very strong candle, retracement candle, now maybe a follow through. But we just have to realize that probably 86.10 is the main target for today, I would say. I would not expect a lot more downside. First of all, because we have a minus 618 target there, but we also have weekly S1 and monthly S1, which obviously is a high chance that price will be used at as a bouncing spot. So if one does take this breakout trade here on the 50-minute chart, just be careful that we shouldn't expect more than those 40 pips at the maximum. As I said, I like to take breakout trades when they occur. So this is the real breakout candle, the first breakout candle. But we did have a consolidation and retracement back to the 38.2 fib. If you didn't take the pullback and didn't take this breakout, then the only thing left remaining is taking the second breakout right here. And that's about it for today, because otherwise, you would be trading against the odds probably, because you might want to think about a retrace or a reversal trade off of the weekly S1 and monthly S1 at 86.10 for upside. That would, of course, be the other way of looking at it, waiting for price as a reversal trader, waiting for price to get to this level and looking for a way to sneak in along at the bouncing spot there. So those are potential ideas there that have and could occur. Now, if price does move back to the 618L4 would be another shorting zone. So if you're looking for a stop loss, it might be wise to put the stop loss above the 78.6 fib. It is a bit of a wider stop loss, about 40 pips, but the target is 42, so it's still a 1-to-1. Plus, if price does move up one more time and hit the L4 and 618 fib, you're not stopped out. And if that, of course, is good to avoid such a exit. If you don't take this breakout and you rather wait for the retracement, you might miss the trade as it follows through. But if it does make a retracement, you get a better price. That's always obviously the balance we have to make as traders. But breakout looks decent to me. Well, folks, I think that's about it. I like the pound odd. I mean, from a daily perspective, the pound odd looks very interesting. We have pound news, of course, and pound news tomorrow to be careful of. But who knows? It could be a very nice breakout trade. Euro 1.5 hours from now, 1 hour 50 minutes from now for me. The euro odd as well. Pound dollar is moving down nicely after we looked at this and saying this looks like a good discount here. But we have the pound news event, so who knows how that can influence it. The Kiwi not getting back towards the 618 I was hoping for. The euro odd still traveling sideways, and there's still a decent chance we can hit the 50 or 618 fib. And but I would like to, there's always nothing wrong with waiting for some candle like that, like this one here. At the 618 to get a bit more confirmation. Yens do not look that interesting except the New Zealand yen, dollar CAD, dollar Swiss not interesting. The Aussie dollar didn't look interesting to me. So it's this euro odd, the Kiwi, the pound, maybe the euro dollar. And from a bigger time frame point of view, New Zealand yen, from a bigger time frame point of view, this pound odd, I guess, for the moment. So that will be the summary, and we'll be back tonight. You can see Nenad's view. He's going to take a look at the weekly FX recap on the euro dollar, pound dollar, odd USD, and more at the usual time. So this is usual, the webinar we usually have on a Monday. Nenad has tonight on Tuesday as an exception. He too is back from 1 week off, and then we just continue with the usual structure. Tomorrow, strategy, and then we'll talk about, in the evening, about indicators-based strategy. It's Wednesday. And then Thursday, we have, let's see, we have fib and wave trading, and in the evening, how to select the best moving pairs in Forex. So these are the remaining 5 webinars. Weekly Forex recap, strategy, indicators-based strategy, fibs and wave trading, and then how to select the best moving pairs. So I hope to see you in one of these, and good trading today. See you soon. Cheers.